Watch the fine print GST special all week only on Bloomberg Quint.
Hi guys, good morning. You're watching DayBreak on Bloomberg Quint Live and I'm Alex Matthew. First, the headlines this morning. Asian markets have opened mixed as investors continue to weigh trade concerns. Crude prices head higher still. Morgan Stanley predicts prices could touch as much as $85 a barrel. IHH Healthcare and Manipal Health submit new bids for Fortis Healthcare. The Munjal Berman family may have pulled out of the race. And the Mumbai NCLT will today deliver its verdict on whether Cyrus Mistry was wrongfully removed from the board of Tata Sons. And finally, Bombay Stock Exchange will today delist over 220 firms from its platform. Trading on these has remained suspended for more than 6 months. Let's take a check on the international markets, and starting with the US. US stocks closed lower on Tuesday following a swift sell-off in the final minutes of a shortened trading session ahead of the Independence Day holiday, which is today, by the way. The losses snapped a 3-day winning streak for the stock market, wiping out modest gains from earlier in the session. Abigail Doolittle of Bloomberg News wraps up all of the action in that curtailed session on Wall Street.
Stocks reversed lower in Tuesday's Wall Street session, with both the Dow and the S&P 500 falling by about 0.5%. The tech-heavy Nasdaq was down nearly 0.9%, and at the highs earlier in the day, each of the major averages higher. The Dow by about 0.6%. So again, a bit of a bearish reversal there. This is investors all day. We're going towards some of the haven assets, including bonds, the yen, the Japanese yen, and of course gold. Those three asset classes higher. Again, that haven bid, but really taking stocks down on a sharp leg lower in the last hour of the holiday shortened trading session. A headline around Micron that China won't be allowed to sell chips in China due to a patent issue. That sets off all sorts of trade fears for chips, in particular technology. The SOX, that chip index, down sharply on the day, down 1.8%, closing below its 200-day moving average. Now, that's important because the SOX and the chip sector are considered to be a leading indicator for the broader market, since those components are used in everything that we need. So it could suggest some bearish action is ahead for the major averages. In fact, on the day, the Dow also closed below its 200-day moving average. That's a way of telling us that the sellers are trying to take control of that stock index, in addition to the SOX. Now, relative to some of that other tech weakness and the reason for the Nasdaq's underperformance, Facebook's down sharply on the day, down 2.4% on investigations into the data breach earlier this year. That took the FANG trade with it. Amazon, Netflix, and Alphabet all down more than 1%. So again, with stocks down, reversing lower, a bearish reversal, and haven bonds higher, Tuesday's Wall Street session was certainly risk off. This ahead of the July 4th holiday on Wednesday, when markets will be closed, but you can be sure that traders and investors will be back at it on Thursday, especially ahead of that June jobs report out on Friday. In New York, Abigail Doolittle, Bloomberg News.
All right, so you know what to look forward to with regard to the US markets. They're shut today, of course, as Abigail just told you. But before we move to Asia, let's give you one quick update on what's happening in the US. The Trump administration is letting Chinese telecom equipment company ZTE resume some business activities, according to a document obtained by Bloomberg. And separately, US lawmakers plan to pressure the administration to closely scrutinize T-Mobile's planned purchase of Sprint. Joe Sobzik of Bloomberg News reports.
Well, this temporary agreement goes through August 1st, and by that time they expect, the administration expects ZTE to be in compliance with its demands. They sacked the board last week, installed a new chairman. The next step is putting $400 million in an escrow fund that was part of the demand by the Trump administration in order to bring allow ZTE back into the U.S. market. Now, there is still some movement afoot in Congress to block this, but that is rapidly losing some steam.
Well, as you said, Joe, this is just a temporary respite. The company is not really entirely out of the woods, is it?
No, it's not. They still have to come into all the compliance with the demands of the administration. But again, there is this effort by lawmakers, few lawmakers, to reimpose the ban that was originally put on ZTE for violating sanctions. That, however, is looking increasingly like it's going to fall by the wayside. Now, ZTE may be restricted from doing business with U.S. Defense Department and the U.S. government, but they still would get access then to U.S. suppliers for some of the equipment and components that they need to continue business.
Just trying to get some cues from the Asian markets that have opened so far. The Nikkei has actually come off some of the lows that you saw early in the session. It's down about 0.3% as of now. The Australian benchmark also down about that same amount, 0.3%. The Chinese markets have just about opened up, and they're seemingly trading with cuts of 0.5%, but it's perhaps a little too early to tell you what the trend for the rest of the day is likely to be. The Hang Seng is opened with a few points in the green. And finally, the South Korean benchmark, the Kospi, has been trading in the green. It continues to do so. I'm going to go across to Agam Vakil, who's here now to tell you all about the day's trade that you have to look forward to, and also about the futures and options space. Morning, Agam. How's it looking today?
Well, a lot of analysts are, this point in time, very cautious when it comes to Euro markets, and we've seen that weakness some come through in yesterday's day of trade. The SGX Nifty, of course, trading with marginal cuts right now. But when it comes to the Nifty and the Sensex yesterday, we did see about some strength come through, and as you can see, the Nifty came and gained as much as 0.4%, despite the fact that we did see a very weak opening. The mid-cap and the small-cap indices took over and outperformed the benchmark indices, with the Nifty Bank as well as the Nifty PSU Banking Index among the few sectoral indices declining in trade. And when it comes to the others, the Nifty Metal Index, of course, declined by as much as 0.4%. And we're watching out for realty and media as well, which actually advanced as well. So it was a mixed day of trade, despite the fact that we did see their benchmarks move up. On a month-to-date basis, IT, of course, stands out in this case, largely on the back of Infosys and TCS, which continue to advance, up 1.6%. Nifty Pharma, of course, also up 1.7%. And on the losing end, we do have weakness in infra, metal, and realty. We'll be watching out for these and whether or not there is some recovery going in. But moving on, let's take a look at the ADRs. And we've seen substantial weakness in Vedanta. That dropped around 3.3%. And to a certain extent, Tata Motors, ICICI Bank, and Wipro. And we have also had some strength coming in Dr. Reddy's. That was up 1.7%. And HDFC Bank, along with Infosys, not too much to speak for. But foreign institutional investors continue to sell. Once again, another 1,000 crores out on a net basis. On the other hand, DIs by around 280 odd crores on a net basis. The numbers, of course, haven't changed quite substantially for FIs and DIs on a year-to-date basis. And when it comes to the contributors, it always is Reliance Industries in the top 4, either on the losing end or the gaining end, and that kind of usually determines the direction of the benchmark indices in that point in time. Infosys and TCS, of course, lend strength, and ITC as well. HDFC, on the other hand, bearing down on the indices along with ICICI Bank. Now, let's go ahead and take a look at the futures space, and we have seen accumulation, long accumulation in the Nifty futures. The Nifty Bank futures, however, we see it's a little bit of short build-up, though one might argue that the closing was absolutely flat. So we're going to have to wait and watch whether or not it is towards, are all these positions towards the shorts or the longs. Of course, the picture doesn't change when it comes to maximum open interest, which continues to remain with the 10,600 put and the 11,000 call, thereby giving you a near-term range for the Nifty. But in terms of changes in open interest, the most active options were the 10,600 and the 10,700 puts, considering we saw the indices move upwards and unwinding in the 10,800 call. Now, the put call ratio for Nifty also is up higher at around 1.5 from 1.45, and the Nifty Bank put call ratio on the other hand at around 0.78 versus 0.75. In terms of key stocks that I'm watching out for is Just Dial. massive surge there, 7% increase in open, 7% increase in the underlying, 29% increase in open interest. So longs coming in through, and KPIT Technologies from the tech space again continues to advance with longs coming in there. And finally, we are talking about Vedanta, which did decline by as much as 3.7%, and we did see fresh shorts added with about near 10% added in open interest towards selling. So these are just some of the counters that I'm watching out for, and of course the benchmark indices as we move into trade today.
Of course. All right, thanks so much for that, Agam. We're going to move to a check on the currency and the bond market. And speaking about currencies, the Chinese central bankers have actually vowed to keep their nation's currency stable and to not deploy it as a weapon in the current trade dispute with the US. And as a result of which you saw some of a reversal in the plunge that you've recently seen in the yuan. But for a check on all of the other currencies that have been moving and also on the bond market, I'm joined now by Saloni Dhanuka. Morning, Saloni. How's it looking today?
Good morning, Alex. So taking your point forward, rupee was tracking gains in the local equity market, and along with a recovery in Chinese yuan largely supported the gains in rupee yesterday. Now remember, the rupee did touch an intraday low of 68.97 levels against the dollar before ending 0.3% higher at 68.58 levels against the dollar. Now traders believe that the central bank did intervene in the currency markets when the rupee breached the 68.90 mark in the early hours to defend the currency movement. Well, speaking of the bond market, sovereign bonds gained yesterday as yield on the 10-year benchmark security dropped nearly 3 basis points to end at 7.88%. Now, in terms of flows into debt market, global funds increased their rupee debt holdings for the 6th consecutive session yesterday. Now, that's according to NSDL data. On the global front, dollar index slipped against all of its G10 peers and ended 0.3% lower near 94.60 levels. Now, remember, the index came under pressure after Chinese central bank commented that it will keep the yuan stable at its equilibrium level and it won't use the exchange rate to manage the trade conflicts between US and China, which is ongoing currently. Now that apart, traders are keeping an eye on US Fed meeting minutes, which is scheduled to release later this week. Now traders are factoring 2 more rate hikes by the Fed in 2018 itself. Elsewhere, both pound and euro gained in trade yesterday against the greenback. This was largely on the back of broad-based dollar weakness. And lastly, speaking of dollar rupee, now it is trading flat in the non-deliverable forward markets, which indicates a flat opening for Indian rupee in today's trade, Alex.
Thanks so much for that comprehensive view, Saloni, of the currency and the bond markets. Let's shift now to commodities, and Jayesh Khilnani is here to tell you all the updates there. Jayesh, I guess, as always, in recent past, we're starting with crude.
That's right, Alex. So in fact, WTI surged to $75, rather Brent WTI surged to $75 per barrel for the first time since 2014. However, it didn't sustain at those levels and declined back, but did manage to close positive. Now, if you look at the Asian screen, both WTI and Brent are in fact trading with a positive bias as well. As far as the inventory data is concerned, we are expecting that API will likely report an inventory decline of more than 4.5 million barrels for last week. And as far as brokerages on oil prices are concerned, we have one note from Morgan Stanley in which they have boosted their Brent outlook for Q3 2019 upwards towards the $85 per barrel mark. So we'll have to wait and watch how prices in fact pan out. Moving on to the base metal space, the index itself on London Metal Exchange declined for the 4th consecutive day. All base metals except for lead declined on LME, and the index itself touched the lowest level since December last year. Now, as far as individual base metals are concerned, we had zinc, which declined more than 1% for the 3rd consecutive session. So zinc prices have been actually under tremendous pressure. Aluminium closed lower for the 4th consecutive day, and copper closed at the lowest level of 2018. So the outlook looking extremely bleak for the base metal space. And if you look at the Shanghai Futures Exchange, base metals have in fact started on a mixed note. Moving on to the precious metal space, we saw some bit of recovery for gold prices, climbed back once again above the 1250 mark on the back of decline in the dollar and the yields in the US.
All right. Thanks so much for that, Jayesh. Now, Tata Steel is not ready to bid goodbye to its European operations just yet. That's according to MD and CEO TV Narendran. He was speaking to Bloomberg Quint's Menaka Doshi, and they, of course, spoke about multiple topics. Here's a small slice of that conversation that you'll find on the website, by the way.
You acquired Chorus at what was the peak of the last commodity cycle and at the peak of the world economic boom as well. You are in some ways, one might say, exiting in some ways the European business, also at a time when steel prices are now on the upswing. Not maybe the peak, but upswing. A big cycle in between. What are the lessons that Tata Steel has learned from this acquisition and European foray?
Well, in 2007, when we acquired Chorus, things were certainly looking good, as you said. I don't think anyone predicted what was going to happen in 2008. And if you recall, in the first 1 year, I think we made £1 billion of EBITDA. So it was a good deal, at least for the first year. But obviously, what happened in 2008 had a very significant impact on our performance since then. The European markets themselves took a long time to recover. It's probably close to where it was in terms of steel consumption in 2008. Just this year or last year. So I think a lot has happened in Europe over the last 10 years. We've done a lot in the last 10 years in Europe as well. When we acquired Chorus, it was an 18 million ton plant, 18 million ton facility. We pruned it, we've got rid of some of the assets which we struggled with, and we brought it down to 10 million tons. So there's a lot of learnings for Tata Steel in the last 10 years, but this is a cyclical business. I think how we deal with the down cycles, how we deal with the difficult times, in some sense, determine what happens to us in the long term.
Do you believe that in the next few years you will see an opportunity to exit European steel altogether?
I think step one is for us to complete this transaction, create this enterprise which we believe has a good balance sheet and good cash flows. If it is a self-sustaining business which is strong on its own, there's no reason for us to exit. But the challenges of the last 10 years was because it was a drain on capital for us, and in some sense it distracted us from the opportunities in India because of the challenges that we faced in Europe. If we have a self-sustaining enterprise which can stand on its own, which is strong in its own way, it's the second largest steel company in Europe, and the pro forma indicates that it can take care of itself. There's no reason why we shouldn't stay invested.
Ever since you acquired this asset, you've only been reducing your exposure to it in one way or the other for a variety of external reasons. I understand that. And so I'm just curious, in the next 5 years, can we expect that because of the same reasons that you decided to reduce your exposure to Europe, the fact that you were losing focus on the domestic market, for the very same reasons, you might even consider fully getting out of Europe in the next 3 to 5 years. You have an acquisition here in India to deal with, Bhushan Steel. You have a big competitor in JSW Steel to deal with. You have a market that seems to be, sort of back on the upswing. Bye-bye to Europe in the next 3 to 5 years?
I don't think so. See, let's put things in perspective. When we acquired Chorus, Tata Steel in India was 4 million tons and Chorus was 18 million tons. So in many ways, even though in India, while we had a very strong cash flow, it would have been difficult for a 4 million ton operation, irrespective of the EBITDA margins, to take care of an 18 million ton operation which was not doing well. Today we are in a very different situation. Even before this transaction, the Indian business has been bigger than the European business. We have 13 million in India and 10 million in Europe. So we are structurally a much stronger enterprise than we were back then. And now we've created a stronger entity in Europe which can take care of its own needs. And India is growing. So if India doubles its volumes in the next few years, as we have announced or as we plan to, India again becomes a 25-26 million ton facility, and with fairly strong cash flows and a good EBITDA margin, we are better equipped to deal with the cyclicality which is inherent to our business. And the European markets also have come back to where it was 8-10 years back.
If you were today confronted with the choice of, let's say, making a big purchase in Europe and focusing on the domestic market, what would your decision be? And let me put a caveat there. You can't have both.
Well, we are not... Well, so we have, if you look at it, even over the last 10 years, during the times that you described, we've grown in India from 4 million to 13 million. So it's not that we've not grown in India. Growing 3 times your size in 10 years is not too bad. I know others have grown faster, but we've not done too bad. So I don't think it's a question of one or the other. Obviously, India is a more profitable market. India is the market which is growing. anyone would, if you have to choose between a growing market and a mature market, you would pick a growing market. You would pick a market you've been operating in for 100 years. You pick a market where you have the strongest equity. So that's natural, but it's not as if we have to make that choice today.
All right, the Mumbai NCLT is expected to deliver its verdict on whether Cyrus Mistry was wrongfully removed from as a chairman of Tata Sons in October 2016. He had filed a case of oppression and mismanagement, remember, against Ratan Tata and 19 others. The National Company Appellate Tribunal, or NCLAT, had granted Mistry and his firm's partial relief, asking the NCLT to waive a clause in the Companies Act which allows shareholders holding 10% or more in a company to press for charges of oppression and mismanagement. Stay tuned. Over the course of the day, we'll bring you all the updates from that event. For now, let's turn to Shraddha Babla, who's joining us now with the stocks in news. Morning, Shraddha.
Good morning, Alex. I'm going to start off with an update on Fortis Healthcare, where the company has said that it has received binding bids on July 3rd, which was the deadline, and that they will evaluate them in consultation with their advisors. More importantly, according to Times of India report, Manipal, TPG Combined and IHH are still in the race to acquire Fortis stake, whereas you have Munjan Burman Family Office and KKR-backed Radiant, which have chosen to opt out. So let's see how that one reacts. World Bank arm IFC has invested 640 crores in Mahindra & Mahindra Financial Services, but that's via bonds. You have VST Tillers, where the June total sales has dropped by 24%, mainly on account of lower sales in the power tillers. You have Quality Limited, which will be in focus, as well as the board has deferred the proposed share buyback and bonus issue. GE Power India will be in focus as well. They've received orders worth 468 crores. ISGEC Heavy Engineering, this is again another engineering company, but with low liquidity. However, they have emerged as the lowest bidder for a 700 crore thermal power project. You might see some positive reaction there as well. Dana Bank has proposed to sell NSDL e-governance infrastructure, NSDL and SIDBI stakes. This is a part of their non-core divestment strategy. You have Federal Bank, which is said to be in talks to acquire Madura Microfinance for about 750 crores at CET report. So let's see how Federal Bank reacts. Also another ET report which says that GVK may sell stake in the hotel joint venture to Fairfax Holdings. So you will have GVK and Taj GVK Hotels and Resorts, which is the hotel JV, a listed entity again, which will be in focus. And lastly, 8K Mile Software Services. This is the company which has seen a sharp drop over the last 2 days. Now you have Kotak Mahindra Investments Limited, which has sold 0.6% stake via bulk deal yesterday. So some of these names is what we should watch out for.
All right, thanks so much for that, Shraddha. Now, Somit Sarkar is standing by with the big brokerage calls of the day. Somit, morning. What do you have for us today?
Good morning, Alex. On the big brokerage calls for the day, first we have is Goldman Sachs on United Breweries. Now, the brokerage has initiated coverage on the stock with a neutral rating and a target price of 1,171. Now, according to the brokerage, United Breweries is well placed to benefit from the pickup in volume growth and premiumization of the market. But there are multiple barriers to this positive. Now, the first barrier could be from the government interventions that can be disruptive to the volumes and margins of alcohol companies. Now, along with this, cultural and social norms and retail network issues would also limit the growth of beer consumption in India. Now, issues like lower consumption of beer among women and lack of appropriate facilities with the retailers would limit the growth, according to the brokerage. Now, lastly, the brokerage also says that the rising competitive intensity from global peers would also challenge the market share gains of United Breweries. Now, the brokerage is expecting the company's volume to grow at a compounded annual growth rate of 7% over FY18 to FY24, and it is expecting the company's EBITDA to grow at a CAGR of around 18% over FY18 to FY21. Second, we have a City on Jindal Steel and Power. Now, the brokerage has maintained its buy rating on the stock with a target price of 401, which suggests a return potential of close to 94% on the stock. Now, in the first quarter of financial year 2018, the production and sales of Jindal Steel and Power grew 37% and 46% respectively compared to last year, which according to the brokerage is decent given the fact that this is a seasonally weak quarter. Now, in the first quarter, the brokerage is also expecting the steel spreads to expand compared to the last quarter on the back of stronger long prices and improving operating leverage from Jindal Steel and Power. And on the operation side, it says that all the plants of the company have fared well in the first quarter of financial year 2019, and the brokerage also notes that the company's production facilities are sharply underutilized, and improvement in utilization over the next few years would improve the company's EBITDA and cash flow. And on the back of that, it says that the valuations are attractive for Jindal Steel and Power.
All right, thanks so much for that, Soumit. Now, WhatsApp and other messaging platforms like it have changed the way that we operate day to day. But a spate of mob lynchings has fueled by rumors, has put the spotlight, and not in a good way, on WhatsApp. The government has now chosen to put WhatsApp on notice, asking them to end the menace of fake messages. Arpan Chaturvedi has all the developments in this story.
Well, the government statement basically starts by saying that it has come to their attention that a number of incidents of lynching have been reported, and these have come from different states like Assam, Maharashtra, Karnataka. And what they have said is that the law and order machinery is taking recourse and trying to address the situation, but they have also said that a large part of the blame lies on the irresponsible, provocative rumors that have been spread using platforms like WhatsApp. And the government statement, of course, says that they have conveyed their concerns to the senior officials in the company, and they have told them that they should put in remedial technological measures to address the concerns that have been raised as far as these incidents of lynching. And of course, what the government says is the blame partly lies on the rumors which have been spread using technologies such as WhatsApp.
All right, we'll have to see how that pans out. WhatsApp, of course, has given a response saying that it's working on an award program. Let's move on now and talk about the Cabinet Committee on Economic Affairs having a meeting today to approve the hike in support prices of kharif crops to honor the government's promise of ensuring farmers at least 1.5 times the price of production cost. This is, of course, one of the stories that you'll find on the website BloombergQuint.com. The other one, US President Donald Trump has added fuel to his feud with Harley-Davidson, saying he's working with other motorcycle makers to offset the production that Harley is shifting overseas. He said on Twitter, and I quote, "Now that Harley-Davidson is moving part of its operation out of the US, my administration is working with other motorcycle companies who want to move into the US." All right, if you're starting a company and need some guidance, or if you're just looking for advice in life, here are some of the year's top entrepreneurs from a global startup competition talking about the secrets to their success and what it takes to break through.
I would definitely recommend to anyone who's about to start a company, be ready to work very hard.
Be brave and be persistent.
Don't give up, don't give up, and don't give up.
Do not expect something in the first years.
Understand your market, understand your competitors, understand how your product's actually going to fit into the space.
Don't get out for the first fail. Fail, it's your partner. And you will fail a lot of time.
As a business, startup, the beginning, it's hard. Your resources are scarce.
You'll get a lot of people coming out of the woodwork initially telling you it's not going to work, this is not a good idea, it's been done before.
We are living in a wonderful time where the cost of starting a business is very low. Anyone can start coding or create a mobile app or create a web page for very, very low cost.
Be ready for emotional roller coaster. If you think you can't wait for the hard work to be done, don't even start, don't even go there, because that hard work is the essence of the company, and it never ends. It never ends. It only gets harder and harder and harder, and it's a beautiful thing.
Well, those are the words coming in from the brightest and the best. I hope that you can take something from that. On that note, have a brilliant day today. Thanks so much for watching.